Does living alone without a girlfriend make you a sharper trader, or does that isolation quietly destroy your edge? Most traders think the biggest fight is between fear and greed. But when you live completely alone with no one to answer to, a third feeling shows up that changes everything. And most traders don't even know it's controlling them. Here's the thing, removing distractions is powerful, but it also removes the one thing your brain needs to keep your trading psychology balanced. And once that's gone, your decisions start shifting without you realizing it. Most trading psychology videos ignore the biggest thing that shapes how a trader thinks, and that's the environment. And if you don't understand how your environment is shaping your decisions, you'll keep wondering why you can't stay consistent, no matter how good your strategy is. Now, most people guess it's something like loneliness or boredom, but it's not. It's actually way more dangerous than that because you don't feel it as pain, you feel it as nothing, and that's the problem. The third emotion is detachment, a complete disconnection from the reality of what's happening in your account. And here's the twist most people don't see coming. This detachment doesn't show up when you're losing. It shows up when you've been alone so long that winning and losing both start to feel the same. Like you're watching someone else's account. Like it's all just numbers on a screen that don't connect to anything real. And the dangerous part? This feels like discipline. It feels like you've mastered your emotions. But you haven't. You've just gone numb. This is why a trader can be up $8,000 on the week and feel absolutely nothing, or down $5,000 and barely react. They think they've reached some Zen trading state. But what's actually happened is their brain has stopped processing trading results as real consequences, because there's no human being in their life to make those consequences feel real. And this leads to a specific behavior pattern that I see over and over again in isolated traders. But before I explain to you that pattern, you need to understand what your brain is actually missing. So here's what isolation actually removes from your trading psychology. Your brain is designed to function in a social environment. And when you trade, your brain is constantly making decisions based on risk, reward, fear, and confidence. But here's what most traders don't realize. The one thing your brain needs to stay balanced is external calibration. And I don't mean someone telling you what trades to take. I mean another human perspective that acts as a reality check for your internal narrative. Think about it like this. When you tell another person about a trade, even just describing it out loud, something happens in your brain. You hear yourself explain the logic. You see their facial expression. You notice if they look confused, excited, or concerned. Even if they say nothing, their presence forces your brain to process the trade through a social filter. And that filter is what keeps you calibrated to reality. But when you live completely alone, that filter disappears. Every thought you have about a trade just bounces around in your own head. Every rationalization, every justification, every fantasy, it all goes unchallenged. You can convince yourself that risking 10% of your account on one trade makes perfect sense. And there's no one there to look at you like you've lost your mind. And this is where those three psychological shifts I mentioned start to happen. And it changes your relationship with risk in a way that's almost impossible to see while it's happening. These three shifts don't happen all at once. They happen in stages, and most traders don't realize they're in the middle of them until they've already done serious damage to their account. The first shift is subtle. Your relationship with risk starts to distort. And it goes one of two ways. You either become recklessly aggressive, or you become paralyzed by overthinking. There's almost no middle ground. On the aggressive side, here's what happens. You start taking trades you would never take if someone was watching. I call this the midnight trade phenomenon. It's 2 a.m., you're alone, the house is silent, and you see a setup that's questionable. Maybe it breaks one of your rules, maybe the risk-reward is off. But you take it anyway. Why? Because there's no social consequence. No one's going to know, no one's going to judge you, no one's disappointed. So that internal break that usually stops you, it's not there anymore. That's why someone in his 20s will almost never have the same approach of risk appetite like an elder who has a family. If you doubt, comment what you think. I want to get your point. On the other side, some traders go the opposite direction. They become so stuck in their own head that they can't pull the trigger on anything. They'll analyze the same setup for 45 minutes. They'll create 17 different scenarios. They'll talk themselves out of trades that perfectly match their strategy, because without external feedback, they don't trust their own judgment anymore. But here's where it gets more dangerous. because once this shift happens, the second one starts creeping in. And this one attacks your identity. This is the shift that breaks traders mentally, because once it happens, every single trade becomes personal. When trading becomes your only daily interaction, when it's the only feedback loop you have, it stops being something you do and becomes something you are. A red day doesn't just mean you lost money, it means you are a failure. A green day doesn't just mean you made money, it means you are a genius. Your self-worth becomes your P&L. This is why isolated traders have such extreme emotional swings. Their mood isn't tied to their strategy performance, it's tied to their identity validation. They wake up feeling like a completely different person depending on whether yesterday was green or red. And that kind of emotional volatility makes consistent trading impossible. But the most dangerous shift is the third one, because this is the one that leads to blowing up accounts, and it happens so quietly that most traders don't even notice until it's too late. The third shift is what I call reward system collapse, and it's the final stage of trading in complete isolation. Here's what happens. Winning stops feeling good. Losing stops feeling bad. You hit a $3,000 winning day, and you feel nothing, just flat. No excitement, no satisfaction, because there's no one to celebrate with. No one to share it with, it's just you, alone, staring at green numbers that feel meaningless. And the same thing happens with losses. A $2,000 red day used to hurt, but now, you just close the platform and go make a sandwich. No emotional reaction. And here's why this is the most dangerous shift of all. When your reward system breaks down, your brain starts chasing bigger and bigger swings just to feel something. You start overtrading, not because you see good setups, but because you're trying to trigger an emotional response. You start taking bigger risks, not because the trade makes sense, but because small wins don't register anymore. You're basically a gambler at a slot machine who's gone numb to winning $10, so now you're only pulling the lever on the $1,000 jackpot spins. This pattern isn't just theory. When I worked as a prop firm data analyst, I had back-end access to thousands of trader accounts. The statistical gap between the 1% who get consistent payouts and the 99% who fail comes down to specific, measurable behaviors. I documented all of it, the actual numbers, mechanical strategies, and step-by-step frameworks, in a book. Links in the description if you want the advanced data behind what I'm showing you here. And all three of these shifts, the risk distortion, the identity fusion, the reward collapse, they all come back to the same root cause. And that's your environment. Remember what I said at the beginning? Most trading psychology content ignores environment. And now you can see why that's such a massive gap. Let's start with the physical environment. Same room, same chair, same screens, same routine, every single day. Your brain starts to associate that environment with a specific psychological state. And because there's no variation, there's no psychological reset, you're never fully off trading mode. You're never fully on trading mode. You're just stuck in this low-level, constant trading consciousness. And that is exhausting. Then there's the social environment, or the complete absence of one. Humans are wired for social feedback. Our brains literally developed in tribal groups where every decision we made was witnessed, judged, and calibrated by other people. Trading alone removes that entire mechanism, and your brain doesn't just adapt to that smoothly, it starts malfunctioning in specific, predictable ways. And finally, there's the time environment. When every day is exactly the same, wake up, check the markets, trade, check the charts, sleep, repeat, your brain loses its ability to distinguish between work time and lifetime. You're always half in the charts. Always thinking about the next setup, always running scenarios. There's no clean separation, and that lack of separation creates the perfect conditions for all three psychological shifts to take root. So now the question becomes, are you already in this? Are these shifts already happening to you? Let's find out. I'm going to ask you a few questions, and I want you to answer them honestly, not out loud, in the comments, because the answer will tell you exactly where you are on this spectrum. Question 1. Do you feel less when you win or lose than you used to? Think about your last big win. Did it actually feel good, or did it just feel like expected, like numbers changing? Question 2. When was the last time you talked to another human being about your trading, not in a forum, not in a Discord chat? I mean, actually spoke out loud to someone about a trade you took. If you can't remember, that's a red flag. Question 3. Have you taken a trade recently that you would never take if someone was sitting next to you watching your screen? Maybe it was late at night. Maybe it was revenge trading. Maybe you just broke your own rule because no one would know. If the answer is yes, you're already in shift #1. And here's the last one. Has your personality changed since you started trading in isolation? Are you more irritable? More withdrawn? Do you talk to yourself more? Do you feel like a different person than you were 6 months ago? If you're nodding along to any of these, here are the specific red flags to watch for. Trading at strange hours when no one else is awake. Avoiding looking at your account balance. Fantasizing about unrealistic wins. Losing track of time, where 2 hours feels like 20 minutes. These aren't signs that you're broken. They're signs that your environment is shaping your psychology in ways you didn't sign up for. So what does all of this mean? And more importantly, what do you do about it? Let's bring this together. Here's the truth. I'm not going to tell you to go get a girlfriend or move in with a roommate. That's not the point of this video. The point is awareness. You can't fix what you can't see. And now you can see it. You understand that the third emotion, detachment, is controlling more of your decisions than fear or greed ever did. You understand that your brain needs external calibration, and when it doesn't get it, your psychology drifts. You understand the 3 shifts: risk distortion, identity fusion, and reward collapse. And most importantly, you understand that your environment is not neutral. It's actively shaping how you think, how you feel, and how you trade. So here's what this means moving forward. If you're going to keep trading alone, and that's a completely valid choice, you need to engineer replacement systems for the feedback you're missing. That could be a trading journal that you review out loud once a week. That could be a mentor or coach you check in with. That could be a small trading group where you explain your setups. It could even be recording voice memos to yourself explaining your trades before you take them. The format doesn't matter. What matters is breaking the echo chamber. Because here's the thing, living alone and trading in isolation can be an advantage if you're aware of the psychological traps and you actively manage them. But if you're not aware, if you just assume that removing distractions is enough, then isolation becomes a slow drift away from rational decision-making, and you won't even notice it happening until you're deep in shift #3, chasing bigger and bigger risks just to feel something. This is exactly why I built the Alpha Equity Manager, to be the external control you don't have when no one's watching. You preset your maximum daily drawdown before the session, let's say 2% on a funded account. The instant your floating loss touches that threshold, it force closes all your positions and disables your trading buttons for the day. The time-locked vault prevents you from changing those settings mid-session when you're trying to justify one more trade. And here's the thing, grab it now through the link in the description, and you also get the Prop Firm Data Book as a free bonus. The mechanical discipline tool plus the statistical analysis, both working together. So remember this, your environment shapes your psychology. Your psychology shapes your trading. If you control nothing else, control your environment. Because the trader who understands how isolation affects their mind will always outperform the trader who thinks they're immune to it. That's the psychology of the isolated trader. That's the blind spot almost every trading educator misses. And now you see it.